U.S. President Donald Trump said a great deal with China was around the corner, offering fresh hope there could be a way out soon for Beijing and Washington from their stalemate. In an interview with Fox News, Trump said the U.S. was going to win the trade battle with China. "I can make a deal right now, I just say they're not ready," Trump said. "I think we'll make a great deal with China, and it has to be great." The comments immediately soothed market fears that the trade confrontation between the world's two biggest economies would become more acute, with Asian markets mostly gaining on Tuesday. Japan's Nikkei index reported its biggest single-day gain since mid-August, while China's benchmark Shanghai Composite Index gained more than 1% after Trump's comments. His remarks come just a month before his planned meeting with Chinese President Xi Jinping on the sidelines of the G20 summit in Buenos Aires. The South China Morning Post has previously reported that the bilateral meeting is scheduled for November 29. U.S. poised to extend tariffs to all Chinese imports if Trump-Xi meeting fails, hitting another $260 billion in products. China's foreign ministry spokesperson Lu Kang told a regular press briefing on Tuesday that China and U.S. have maintained contact about the meeting between Xi and Trump in Argentina. At the same time, Lu said the U.S. should talk to China in a serious, equal and trustworthy manner if Washington intended to address Sino-U.S. trade issues through talks. Trump's expressed desire for a deal with China, although he insists that the U.S. has to be on the winning side of that deal, has made it possible for Washington and Beijing to find common ground, as the Chinese government has repeatedly said it is open for trade talks. Xi will attend an import expo in Shanghai next week, an event designed to showcase Beijing's willingness to buy more from the rest of the world and to cut its trade surplus. The bilateral trade imbalance between China and the U.S. has been one of Trump's long-standing complaints. In his latest interview, he said China has been really hurting our country economically, and they've drained our country. Su Hao, a professor in diplomacy at the China Foreign Affairs University, said the interview showed Trump was willing to talk and the U.S. still valued China as a potential economic partner. Trump is willing to negotiate with China, although he will put America first in the negotiations, and a second signal is that the U.S. will not abandon China as a potential economic partner, Sun said. Some have said the U.S. intends to sever all economic links with China, but that might be too extreme. Fears about the escalating trade war between China and the U.S. has cast a shadow over markets and economic growth worldwide, and China's growth in markets in particular have taken a hard hit. China's yuan in spotlight amid key economic data releases this week. China's economic growth in the third quarter slowed to its lowest level since 2009, while the stock market has been one of the worst performing in the world this year. In the latest effort to encourage investors, China's stock market regulator on Tuesday issued a statement trying to talk up stock prices. The Chinese currency's exchange rate against the dollar has also weakened to the lowest level in a decade and is about to break the key psychological level of 7 yuan to the US dollar. Since early July, Washington has imposed tariffs on $250 billion of Chinese imports. The U.S. has also flagged its intention of raising the current 10% tariff rate on $200 billion worth of those imports to 25% next year. China has retaliated by imposing tariffs on $110 billion worth of U.S. imports. China's future rests on mending fences with the United States. Hao Hong, head of research at BOCOM International, said losses in jobs and investments in China over the long run, due to trade tensions with the U.S., would be particularly harmful to China's domestic economy. Business will relocate, and once they leave, the damage could be permanent to China's domestic employment and economy, he said. Meanwhile, Trump also said he was preparing for an escalation if he couldn't get the deal he wanted. "I have $267 billion waiting to go if we can't make a deal," Trump said in the interview, referring to his plan to extend tariffs to all Chinese imports. Trump plans to impose tariffs on all Chinese imports if his talks with Xi during G20 don't go well, Bloomberg News reported earlier, citing three unidentified sources. Wang Yang, director of the Center for International Political Economy at Peking University, said he was suspicious about whether China and the U.S. could reach any breakthrough in their trade talks, partly because Washington's tough stance on trade was increasingly seen by Beijing as part of a broad strategy to contain China's rise. It is highly likely that Trump will extend the tariffs to another $260 billion in products because Trump's goal is not about negotiations, but containing China, he said. The trade war will expand and there could even be a partial decoupling of U.S.-China trade relations as the U.S. is seeking to decrease its reliance on exports to China. China, on the other hand, could compromise on intellectual property protection, market access and increased imports of American agricultural products and energy, but Beijing would not give up its plans to upgrade its industries, Wang said. Liu, China's foreign ministry, said Trump's threats would be ineffective against China. China has full confidence to walk its own chosen path, even if the U.S. chooses to end cooperation with China, he said.